Have you ever wondered about the current state of the Chinese economy? Well, the past half year has been a roller coaster ride. It's been grappling with slow growth, record youth unemployment, dwindling foreign investment, weak exports and currency, and a property sector on the brink of crisis. A string of challenges that has led US President Joe Biden to describe the world's second-largest economy as a ticking time bomb, predicting a surge of discontent within the country. On the other hand, China's leader Xi Jinping counteracted these comments, defending his nation's economy for its strong resilience, tremendous potential, and great vitality. But despite the political back and forth, one thing is clear. The Chinese economy, while not on the verge of implosion, is certainly navigating some deep-rooted challenges. So, as we delve deeper, let's keep in mind, while it seems unlikely that the economy will implode, China is definitely facing some deep-rooted challenges. One of the main factors contributing to China's economic problems is its property market. For 2 decades, the real estate sector was a golden goose, accounting for a third of China's wealth. Developers thrived in a wave of privatization, building relentlessly. But in 2020, this boom met its match, a global pandemic and a shrinking population at home. Such ingredients are hardly the recipe for continued house building. The government, anxious to avoid a meltdown akin to America's 2008 crisis, placed restrictions on how much developers could borrow. The result? Developers trapped in a debt spiral, owing billions they couldn't repay. With demand for houses plummeting, property prices followed suit, leaving homeowners still reeling from 3 years of stringent coronavirus restrictions in a poorer state. Without a post-pandemic spending boom or major economic bounce back, China's economic recovery seems to be stalling. Another peculiar aspect of China's economic situation is its addiction to construction. Take, for instance, the recent decision in Yunnan province bordering Myanmar to build a multi-million-dollar COVID-19 quarantine facility. Despite the financial strain, officials pushed forward with this ambitious project, a clear testament to this construction compulsion. Local governments heavy with debt are feeling the heat. Some have even resorted to selling land to themselves to fund these relentless building programs. It's a desperate move, indicative of the pressure to keep constructing, keep expanding. But there's a limit to this strategy. There's only so much you can build before it becomes a futile exercise, a drain on resources. This construction addiction is a road with an end, and China is fast approaching that point. The nation needs to shift gears to find a new path towards prosperity. China needs to find a new way of generating prosperity before excessive construction becomes a waste of money. So, what does the future hold for China's economy? Economists and experts agree that China's economy is at a crossroads. Structural and institutional reforms are necessary to shift away from the current model, which relies heavily on construction and property. A new approach, many argue, should focus on developing a robust financial sector. This could invigorate the economy, and potentially rival powerhouses like the United States or Europe. However, this transition would require the Chinese government to loosen its current regulations and cede substantial power to private interests. This is a daunting proposition, especially considering the recent tightening of government control over the finance sector and the crackdown on tech giants like Alibaba. The government's current approach seems to be at odds with what many economists believe is necessary for a prosperous future. With the old model failing, China is at an inflection point. It remains to be seen how its economy will adapt and evolve in the coming years.